welcome to the Trust Vista Talk podcast, where we engage with senior asset managers and advisors across a broad range of topics. Trust Vista is the leading outsourcing firm for the financial services industry, supporting over 1,000 clients with over 10 trillion in assets under management.
This is Abhilash Jayakumar, co-founder and managing director of Trust Vista. On today's Trust Vista Talk podcast, I have the pleasure of speaking with Henry Cornell, senior partner of Cornell Capital. Prior to founding Cornell Capital, Henry was the vice chairman and one of the original architects of the merchant banking division of Goldman Sachs. Henry has over 35 years of experience across all aspects of private equity investing in a broad array of industries. He began his career as an attorney with Davis Polk before joining Goldman Sachs investment banking division in 1984. He moved to Tokyo in 1988 to found Goldman Sachs' real estate efforts in Asia, and then moved to Hong Kong in 1992, where he founded Goldman Sachs' principal investment business in Asia. Under his leadership, Goldman Sachs made numerous landmark investments in the region, including Industrial and Commercial Bank of China, Kookmin Bank, Ping An Insurance Company of China, and Sanyo Corporation. Henry returned to New York in 2000 as the head of private equity Americas and Asia and as a member of the Global Investment Committee. He was subsequently named vice chairman of the merchant banking division. Henry's notable U.S. investments while at Goldman Sachs include Allied World, Barrett Energy, Cobalt, Kinder Morgan, MRC Global, and USI. Henry is also a director of Corel Brands, Blue Mistral, MRC Global, Purastar Linen Group, and Talcott Resolution. Henry is a member of the board of trustees of Mount Sinai Hospital, the Whitney Museum, the Asia Society, and the Navy SEAL Foundation, and is a member of the Council of Foreign Relations. Whew. Henry, thank you so much for joining us today.
Very nice to be with you.
It's quite an impressive resume you've made up, but one thing I didn't mention, you've clearly been a business builder for a very long time, is you've also built a winery.
Yes, let's not talk about the economic aspects of that particular investment because it will keep people drinking wine. Maybe we actually should talk about it. I've always had a bottle of wine on the table. My mother had it when we were kids, and so when guys in college were drinking bourbon, I was drinking cheap red wine. And when I moved back to the States after being in Asia for 12 years, I thought, the idea of owning a vineyard would be fun. So I bought a chunk of land on the top of Spring Mountain between St. Helena and Santa Rosa. That was a vineyard from 1850 to 1920, got ripped up in Prohibition. So started from scratch, made every mistake you could possibly make twice. And then in about 2012, when Chateau Latour bought the Arajo vineyards in Napa, Françoise Pechon, who is a brilliant winemaker, came and rescued our operation. And now the critics love our wine. I love our wine. We're getting 97, 98 points. And it's a lot of fun. But I must tell you, when you make a decision in the wine business, even though I have a lot of patience from being in private equity for a long time, you don't know whether your decision's right or wrong for 5 years. So it is.
That sounds like a similar timeline to private equity.
Well, private equity, you can pivot and see responses to your initiatives within a shorter period of time. But when you're ripping out vineyard or putting in vineyard, Mother Nature has her own timetable and it's not yours.
So it probably creates a new perspective for patience.
Well, my 5 kids create a new perspective for patience. The vineyard just helps me increase my patience with them.
Yeah, I have a 1-year-old who peed on me at 4:30 this morning, so
consider it a blessing.
Business is a lot easier.
Right.
Well, certainly it's an interesting time we're in right now, but it would be great to kind of hear about your experience over the last 30 plus years in private equity and how you've seen it kind of evolve as an industry and globally. And it's a much more connected world today than it was 30 years ago, and how that has impacted the industry as well.
Sure. Well, I think when I was fortunate enough to move to Tokyo in 1988, you take communication for granted today because it is truly instantaneous. But the cutting edge technology then was the fax machine. And so you had to wait to get documents, stand by the fax machine, call back to New York. And so instantaneous communication has really brought us all closer together. Sometimes I yearn for the old days when I had more time to consider aspects as opposed to needing to really react quickly to things. Having a little more time is a good thing, but When I was in Japan, if you recall back then, Japan was going to own the world. The Nikkei got to 39,000. Price of a hamburger in Tokyo was the price of a steak in New York. The Imperial Palace was worth more than the state of California. And obviously that changed. And then Deng Xiaoping basically came south to Shenzhen and created special economic zones. I think his phrase was black cat, white cat, it doesn't matter as long as it catches mice. To be rich is glorious. And he unleashed the Chinese people who, in a miraculously short period of time, went from mouse suits to blue suits, bicycles to cars. And being a witness to this historical transformation was just a remarkable experience that really changed my life for the better, because friends of mine from then are running ministries today, CEOs of companies there. And so we all grew up together with this transformation and with the cooperation between the States and China. And obviously right now there's a little bit of a trade discussion going on between both countries. And this doesn't scare me. It concerns me deeply. But the difference between China and the States, and let's say the old Soviet Union and the States, is literally millions of Chinese students have studied in the States, and many US students have studied in China, not to mention the business interaction between China and the States. So the ties are deep, and these are the ties that bind. And if you think back to the Soviet Union, the Bolshoi Ballet would come to New York once a year. Pepsi did a deal with Nixon and Don Kendall, back when I was in college. And, I guess they traded Pepsi for Stolichnaya. I think we got the better end of that deal. But, it gives me some comfort that there are legitimate issues. They will fray relations as they are right now, and it could actually get worse. But that reasonable people will come together, because there's much more we can do together than we can do in an old-fashioned trade war where everyone loses something and there's no ultimate winner here. And so I'm hopeful that legitimate issues, and there are legitimate issues, get resolved. But having been in China in those early 90s and having a third of my capital today in the new firm come from the region, we get a very good bird's eye view about what folks are thinking. And then some of my old partners are down in Washington in pretty good positions. And so I follow what they have to say pretty closely. So that's a lot I just threw at you, but it is an interesting time, as the saying goes. And I'm comfortable that, or at least I'm hopeful that once the presidential election is behind us, everyone can get back in a room and really pull things together.
Yeah. And, I'm going to come back to some of the things you spoke about in a second, but maybe you can talk about Cornell Capital specifically. What were you thinking when you launched the business? What was the strategy that you were going to implement to differentiate yourself from in a crowded marketplace?
Oh, it's a very interesting question, because when I started in the business, 30 plus years ago, there were maybe 25 firms. Now there's 25,000. There was 25.
Yeah, they didn't call it in an industry back then.
Yeah, no, it was, a couple of guys trying to figure out what to do. I basically called a number of my old partners and colleagues. And so I knew, first of all, that experience really counts. That if you're going to do this, this is not, a matter of being able to buy things. You can always buy things, but owning things and understanding what you can really do with your assets is critical, and that comes with experience. So if you look at the people in my firm, first of all, Steve Trevor, I've known and worked with since the early 90s. Rich Drucker was my boss when I was at Davis Polk, in the first Reagan administration. Joy Xu, who runs Asia for us, I've known for over 20 years. Justine Chang, the same. And so the senior people have a deep interconnectedness, so we know how each other takes our coffee. So starting with that intellectual depth, and then looking at, with a whiteboard, what worked and what didn't work throughout my career. And again, being at Goldman for 30 years, I wound up leading 100 investments and basically turning 20 billion into 50 with very few donuts. but it's from the donuts that I learned the most. And then what the issues were in investments that required extra help. And so we determined that given we are more like a Navy SEAL platoon than an Army division, even though we now have 30 people and we're fully operational in Hong Kong and Asia as well as in New York, that a focused portfolio that we could really build and develop would give us the best chance of profitability and being successful in our business plan. And since all the senior people have deep roots in Asia, and obviously Joyce is a spectacular player in Asia, we have a unique ability, having pioneered cross-border investing in the 90s, continuing into the 2000s, to basically buy investments in the States, buy companies in the States, and take them to Asia, or if they're already there, to enhance their operations, and frankly, to take Chinese companies to the States or Asian companies to the States. And so in our first fund, we've been very successful in doing that, in spite of the virus and in spite of the ramifications post the virus, because another one of our principles is not financial engineering. We employ low leverage precisely because I've lived around a bit, and you can't predict pandemics. You can't predict meteors from outer space. And so in our portfolio, we have no subordinated debt, no mezzanine, only term loans. Our leverage is roughly 3.8 times. And the industry is over 6. And so when something happens like the virus, I don't have to worry about my capital structure. I can focus on operations and actually figure out how to go through this. And then having a senior team who is very experienced allows us to pivot. And so again, I know I've thrown a lot at you there, but as we sat with that whiteboard, we said, we know cross-border, check. We understand through the fact we've been doing this for decades that we have many relationships in the CEO community. And with all due respect to Goldman Sachs, JP Morgan, and Morgan Stanley, when you know CEOs in the areas you're trying to make investments, Jane will talk to Jim, who will talk to Joan, who will talk to John, and all of a sudden, proprietary opportunities come your way, or more information comes your way, and you're with the people who are actually going to execute your business plan. And so we've tried to distill the things that worked and eliminate the things that didn't work as we pulled this together. And believe me, we're still learning every day, particularly this year. Oh my God. One of my businesses is tied to the hotel industry. So regardless of our wonderful capital structure, when all of my customers are shut, on my list of risk, I understand pandemic. I never really put the idea that the U.S. would voluntarily shut its entire economy for a period of time. So, old dogs learn new tricks.
Yeah. When I started Trust Vista back in 2006, just a couple of years before that is when Thomas Friedman had written The World is Flat, and McKinsey coined the term brick, and that's where all the growth was going to come from. And so it seemed like a great idea to start a business that was going to cross those boundaries. But certainly I'd never lived in India or done business when I decided, I'll just move there and start a company. And certainly every country has, and state within those countries has its own local challenges and ways of doing business. What are some of the biggest differences that you've seen in doing business in China versus the US?
In the old days, let me say, the old days being the 90s, there was a need to build trust and spend time in old school type relationships. Having documents and lawyers and everything in the room was just unnecessary to the extent that you were really never going to sue anybody. You just had to have an understanding of what was good for them and what was good for you. And so in a very funny way, trust is important in the States also, obviously. Trust is a universal. But it was unique to me that in the 90s, when I was looking to make investments in certain companies, a handshake was a real handshake. You basically said, this is what I'll do, and this is what you'll do, and this looks like it's a good idea, and you shook hands. And when you had issues, you didn't refer to documents. You'd have, a couple of shouting matches here and there, but you basically worked to solve it. And you really did it on a person-to-person direct basis without involving the legal system. I think the change today is that the level of sophistication and discipline and just institutionalization, if you will, of the marketplace has changed so that, there are lawyers in the room, and, some of my best friends are lawyers, so I'm always welcoming them in.
My wife is a lawyer, so I won't say anything.
Look, I was. So, and I think now, particularly when you have a trade problem between China and the States, having those old school relationships where somebody can vouch for you in country really means a lot. And frankly, this is the same when I was doing investments in India in the 90s too. Having a few key friends, Uday Kotek, Anand Mahindra, these are guys who basically were my teachers for how things get done in India and what you needed to do. And we had a number of successful investments in India as well. And, the same in Thailand, certainly the same in Japan, where I lived for almost 5 years and continue to have a relationship today. I mean, I think it was a special time in the 90s, and I was lucky enough to be present at creation of the quote unquote private equity industry. Because for a period of time, it was really only myself and Dan Mintz from Morgan Stanley were the two big houses in Asia. And then Dan moved back to New York, and Morgan Stanley stopped what they were doing for a period of time. I think they've rejoined it today, and they're really smart guys. But, for a while there, I was kind of the only game in town.
You talked about the team structure you have, the history of working together. It's certainly not a typical Fund One. You guys, when you launched, had one of the largest Fund Ones ever, which is reflective of the quality of the team you've put together. Going back to what you talked about with the vineyards, how you can be more responsive in a private equity setting than you can be with a vineyard. How has your team been able to be responsive first with, the issues with trade between the two countries, and now more so with the pandemic?
Well, I'll give you two very specific examples. So my hotel laundry investment, when we realized in early March that the entire hospitality industry in the States, where we have 95% position in Hawaii, 70% in Vegas, half of Florida, all of Boston Metro, for example, literally our customers were closed. So you went from 9 figures of revenue effectively to zero. So what do? Well, you basically use that opportunity to preserve liquidity so that you can stay alive, because when you have a situation like this, you're always playing for time, because every downturn has an upturn. And, if you go back to the 80s, you go back to the S&L crisis, you go back to the financial crisis, if you can figure out a way to last, you will probably recover and do well. So we did an intense factory by factory, line by line re-underwriting to understand how, when we reopened and would have to expose more capital, because you'll have negative working capital as you're turning the machines back on, how you can squeeze margin out of that so you can take care of your balance sheet, service your customers appropriately, and still recover your capital. And so I will say that in my career, I have never had a team work harder, longer, deeper in that re-underwriting. And one of the things we've also done at our firm is I have senior advisors and a board like Larry Bossidy or George Cheval or Henrik Slipsager or JP Montepet, Gail Mandel. So these are very experienced people who literally gave us their time as we were re-underwriting. So that's solving a problem. And I think we're on the way to solving it. Hopefully there's a vaccine and hotels open and people travel again. On the flip side, we own Pyrex and Instant Brands. And so there's the opportunity to capitalize, if you will, on people staying at home and cooking at home. And so I can't tell you how much more Pyrex we sold over the last few months and how many more Instant Pots. And so
I bought one last week for our anniversary. So
let me tell you, Indian cuisine is made for the Instant Pot. So I will say that I'm fighting a fire on one hand, and I am planting seeds for the future on the other. And so it was very interesting to be slogging through a problem and then to have to race to capitalize on the opportunity. And then one of our investments is the world's largest contract manufacturer of personal care products, hair care, cosmetics, skin care. And so people were wearing less lipstick during the pandemic, so to speak. But we are also one of the world's largest manufacturers of hand sanitizer. So a business where we would sell, for argument's sake, 100 units went to 500 units of hand sanitizer, and hand sanitizer is here to stay. I think we'll all be dipping our hands in that, forever and ever. And people will come back and wear lipstick. Not that I'm putting on lipstick these days, but it will come back. And so it's been a very interesting time where the team has had to work twice as hard. And that's why, frankly, we never closed our office. We found that you can convey information over Zoom, but if you need real problem solving, having that personal dynamic in a room creates more solutions, unleashes creativity, and really has people working in one direction. Not that you can't do things on Zoom or remotely, but I'm an old dog and some tricks I can learn, but the older guys in the group, we were coming in every week and, we wore masks, washed our hands 50 times a day, and we were careful. But the younger guys came in too, and we really never closed the office. And it was a really wonderful team building experience, even though we were dealing with a lot of stuff, I think is the proper polite term, as well as trying to capitalize on the opportunities.
Yeah. As you think about business building in this type of environment, there's a lot of individuals who are getting displaced from previous jobs, and maybe the opportunity cost of launching a firm is lower than it might have been when times are good. So we're seeing a lot of folks thinking about launching funds for the first time. And in my experience, most folks who are more gray-haired have a way of doing things that are less adaptive to new ways of doing things. And it's been a very different dynamic working with Cornell Capital, as you actually partnered with TrustVista very early on in your life cycle, which usually we don't see folks who are more gray-haired experimenting with new business models. How have you approached building the business of private equity in this decade?
Well, as I said earlier, by design, our organization structure is an upside down pyramid. I have many more senior people than I do junior people, whereas most institutions have a right-sided pyramid with a couple of guys at the top, and then it spreads out. But I just wanted more hands-on ownership, more hands-on responsibility for relationships in the market. And that comes from seasoned, experienced people. We also, frankly, have one of the most diverse firms in the industry, where more than half the partners are women. The firm is the United Nations of People, if you go on our webpage. And that also leads to better ideas. And that it's not a political statement. It's more of an economic reality. The world is a diverse place, and it's filled with all thoughts, all opinions. And if you have just one group dominating those insights, you will only get certain outcomes. But by bringing everyone together, putting it in an Instant Pot, hitting the button to cook, you wind up having a very good meal. And I think that's what we set out to do, is have people that get the joke about a startup, that it's risky, but that if it's successful, you'll be present at creation of something that should last for decades. And so right now we've been doing this for 7 years. Some days it feels like 7 weeks, and sometimes it feels like 70. It depends on what the problem set is. But we're off to a wonderful start. And I think you won't find many firms, quote unquote, first time firms with 2 operating offices on 2 continents, 30 people and 20 senior people. And we'll just do a shout out to TrustVista, because your analytical team has been exceptionally helpful to us as we look at consumer trends, we look at deals in the marketplace. And so I can heartily recommend your firm and its expertise to anybody in my industry, or frankly, anyone in corporate life who wants an objective opinion from very hardworking folks. So hats off to you guys.
Well, I appreciate that. Maybe to wrap up here, as you think about the future, obviously a big part of your strategy will remain this opportunity to leverage your cross-border experience and bring businesses into new markets. What industries do you think are going to be the best opportunities for you to focus on for this strategy?
Well, I set out to do what I know and what my partners know. And so anything in what I would call the consumer industrial space, and you can see that in our portfolio. So we own Pyrex, 100-year-old brand in everybody's kitchen. How do we build that up? What are the opportunities for acquisition in the household space? What other products, new products we can launch? What other new ways of distribution, which is why we bought Instant Brands. 10 million Facebook and Instagram followers, whole communities that compete with one another on chicken butter recipes, for example. And so,
are you on Facebook and Instagram?
I have a Facebook page because I was told to have one, but I don't really use it. And on Instagram, I follow my wife and my children. That's about it. But I'm a bad example. I actually still read the newspaper and I carry books. So
at least you have a Facebook account. I haven't gotten one of those yet.
Well, come on, guy, get with the program. It's the 21st century. And that space of consumer industrial, it still works in the States. Even if it's GDP growth, but if you have the right position, you can do exceptional growth. And obviously, consumer in Asia, which is our other focus, is still spectacular. And then, I also did all the FIG investing, financial institution investing at Goldman. And so we love the insurance industry, also in a kind of a, extended way, consumer based, but more financial oriented, obviously. And so we have 2 insurance investments in our first portfolio, in our first fund. We're working on another one right now, which we'll announce probably in the next few weeks. And it's an area where if you buy well and you have a great management team, there are certain times that call for new entry and certain times when you can harvest that if you do it intelligently. And my track record in this respect has been pretty good. And so we're continuing that here. So we really have kind of this barbell of insurance and consumer industrial. And consumer industrial, if you really kind of go through it, is kind of 70% of the GDP. So it gives us a wide playing field to run down and see what's interesting. So we've looked at nutritionals, we've looked at food and beverage. Prices have been a little high, growth has been a little short. So we've picked our spots and we're pretty disciplined, because the nice thing about being old guys is we don't have to prove we know how to spend money. I mean, we have track records. We're trying to do right by our investors, and that discipline, price discipline, capital structure discipline really pays over the long haul.
Certainly, as it's become more of an industry and more competitive, having a unique position and strategy and being able to create proprietary deal flows, I think really is going to be necessary to create alpha in this industry. And certainly you, your team, and Cornell Capital have displayed that thus far.
Well, you're very kind to say so.
Oh, wonderful. Well, thank you so much for the time today, Henry. I very much appreciated having the conversation, as I'm sure our audience will as well. If you'd like to connect with TrustVista or Cornell Capital, please email us at reachus@trustvista.com, and we'll look forward to speaking with you at our next TrustVista Talk.
And with that, we come to the end of this episode of the TrustVista Talk podcast. Thank you to our listeners, and we would love for you to subscribe, rate, and leave a review wherever you access podcasts. Please follow us on LinkedIn and Twitter to stay updated on additional content. To know more about how we support our clients on due diligence, business development, portfolio management, fund administration, data analytics, and other areas, feel free to visit our website and reach out to us at www.resista.com. Any information, opinions, and recommendations presented by our speakers are their own and do not necessarily represent the views of their firms or TrustVista and should not be constituted as investment advice.